The American trade war, a new era of protectionism. America has launched a trade war. On April 2, 2025, the U.S. announced new tariffs. These tariffs are taxes on goods imported from other countries. The baseline rate is 10%. This applies to imports from all countries. However, some countries face even higher tariffs. This is a form of protectionism. It aims to shield American businesses from foreign competition. The move has sent shockwaves through the global economy. These tariffs are a sharp departure from decades of free trade policies. The U.S. has historically advocated for open markets. Now it's embracing protectionism. This shift has sparked a global trade war. Other countries have retaliated with their own tariffs. China, for example, has imposed tariffs of up to 84% on U.S. goods. The European Union has also retaliated with tariffs on a range of American products. This tit-for-tat escalation is creating uncertainty and volatility in the global market. The trade war is already having a significant impact on the global economy. Businesses are facing higher costs. Consumers are seeing prices rise. The International Monetary Fund has warned that the trade war could trigger a global recession. This would have devastating consequences for economies worldwide. This trade war is a lose-lose situation. It hurts everyone involved. It's time for cooler heads to prevail. The U.S. and its trading partners need to come back to the negotiating table. They need to find a solution that works for everyone. Sri Lanka is caught in the crossfire of this trade war. The U.S. has imposed a 44% tariff on Sri Lankan exports. This is a significant blow to the Sri Lankan economy. The U.S. is a key market for Sri Lankan goods. In 2024, Sri Lanka exported over $3 billion worth of goods to the U.S. Garments are one of Sri Lanka's main exports to the U.S. The garment industry employs over 300,000 people in Sri Lanka. The new tariffs will make Sri Lankan garments more expensive in the U.S. market. This will hurt demand for Sri Lankan products. This could lead to factory closures and job losses. Sri Lanka is already facing an economic crisis. The country is struggling with high debt, a weak currency, and rising inflation. The COVID-19 pandemic has also taken a toll on the Sri Lankan economy. The trade war is adding to these challenges. It is pushing Sri Lanka closer to the brink. The 44% tariff is a major obstacle for Sri Lankan businesses. It is making it harder for them to compete in the global market. This is particularly challenging for small and medium-sized enterprises. These businesses are the backbone of the Sri Lankan economy. They are already struggling to cope with the economic crisis. The trade war is putting their survival at risk. The U.S. tariffs are having a ripple effect throughout the Sri Lankan economy. The most immediate impact is on export revenues. The 44% tariff makes Sri Lankan goods less competitive in the U.S. market. This leads to a decline in demand for Sri Lankan products. As a result, Sri Lankan exporters are earning less revenue. The decline in export revenues has a domino effect on the rest of the economy. It puts pressure on Sri Lanka's foreign exchange reserves. These reserves are used to pay for imports and service debt. As reserves dwindle, Sri Lanka's currency weakens. This makes imports more expensive, further fueling inflation. The trade war also threatens jobs in Sri Lanka. The garment industry, a major employer, is particularly vulnerable. As demand for Sri Lankan garments declines, factories are forced to scale back production or shut down altogether. This leads to job losses, particularly among women who make up a large portion of the garment industry workforce. The economic uncertainty created by the trade war also discourages investment. Both domestic and foreign investors become hesitant to invest in an environment of escalating trade tensions. This lack of investment further hinders Sri Lanka's economic growth prospects. Sri Lanka faces an uphill battle. The country must navigate the fallout of the US-led trade war. The government needs to act swiftly and decisively. It needs to mitigate the negative impacts on the economy. One crucial step is diversifying export markets. Sri Lanka has been heavily reliant on the US market. It needs to reduce its dependence on a single trading partner. The government should explore new markets for Sri Lankan goods and services. This includes strengthening ties with regional partners in Asia. It also means exploring opportunities in emerging markets in Africa and Latin America. Another key strategy is to diversify the export basket. Sri Lanka needs to move beyond traditional exports like garments and tea. It needs to focus on developing higher value products and services. This includes investing in sectors like information technology, tourism, and renewable energy. The government should also provide support to affected industries and workers. This includes providing financial assistance to struggling businesses. It also means offering retraining programs for workers who have lost their jobs. Finally, Sri Lanka needs to work with other countries to find a multilateral solution to the trade war. This includes engaging in dialogue with both the US and other affected countries. The goal should be to de-escalate trade tensions and work towards a more open and rules-based trading system.